This is James with WSTrades.com. I want to provide an update here on ticker CHPT or Chargepoint Holdings. So they do have earnings coming up after hours today. And I was looking in Google for the consensus, and it looks like they are expected to lose 13 cents a share, and revenue is expected at 152.83 million. So if we look at previous earnings here, you can see they've been pretty consistent at losing 20 to 30 cents a share. Going back a couple years here, this first report we see here is a much bigger loss at 84 cents a share. But since then, they've kind of been between that 20 to 30 cent range, losing that much per share every single quarter. And if they can come in and actually meet the consensus here at 13 cents, that would be a big improvement versus the same quarter in 2022. So we'll see if they can do it. I mean, that would definitely be a move in the right direction. But as you can see, if they're even losing 13 cents a share, they're still very far from making a profit. So they're still really struggling to make a profit. Let's go into Yahoo Finance and look at some of the financial statements here. Come to the cash flow statement, you can see every year that they've been in business, the operating cash flow, they've lost more and more. So kind of starting in 2020 here, if we go back to 2020, you can see they lost 87 million for operating cash flow. And then for the quarter ending January 31st, 2023, they lost 267 million. So that number is just kind of growing larger and larger the longer they stay in business. You can see it's kind of shaky on the quarterly here. They went from losing 62 million in operations or operating cash flow up to 82, down to 50, then up to 100. It's just kind of up and down and all over the place. If we look at free cash flow, you can kind of see the same thing. It's kind of up and down. They lose 68 million, they lose 88 million, it goes down to 54 million, and then boom, they lose 106 million. So if we look at the annual on the free cash flow, kind of paints the same picture. 2020, they lost 102.8 million, and that has just grown to free cash flow of negative 285 million. Let's take a look here at the income statement, and on the annual, you can see 2020 they lost 134 million for earnings, and then for 2023, or the year ending January 31st, 2023, they lost 344 million. So you can see the earnings, they're bleeding more and more money every single year that they're in business. So they really need to turn this trend around because they've been doing this for several years now. They need to continue to narrow the loss on those quarterly earnings reports and really work down towards a break even on EPS and start to work towards a profit. If we look on the statistics tab here in Yahoo Finance, we can see that they have a good current ratio of 2.37, so they're not going to be facing any like short-term liquidity issues or needs to raise cash in the short term. But eventually here they can't keep losing like 20 to 30 cents a share every single quarter, because this current ratio is going to dwindle, and they're going to be looking at financing again. So for me, this is not my type of investment. I don't invest in companies that bleed money every single quarter for years and years and years, because you can kind of see what the stock chart looks like here, and it's not great. I feel bad for the people that bought into the pump here at the top. That's pretty brutal. But even if you come down to the $10 level here, that's not as bad. If you look at when this thing was trading around 10 before it went on that crazy run, people that were holding at that point, it's not so bad for them. This thing's just down a couple of bucks. But for other people that bought into some of these pumps, you can see it had several pumps here and several rallies. It's going to be a lot rougher for them on the loss that they're sitting on right now, hoping that this thing recovers. So we'll kind of see if they can come in and meet estimates here around that 14 cent loss mark. If they can, that's good. That's a good improvement from the same quarter last year, and they just need to continue to do that. They need to get these losses here of 25 cents, 23 cents, 23 cents, get those in the teens and kind of work towards a break even here, before they run out of cash and need to look into financing again. So I'll continue to keep you updated here on ticker CHPT or Chargepoint Holdings. Please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.